one space which continues to be down and out is the entire metal sector. So let's try and understand that a little bit better. We have with us Rakesh Arora joining in on the show right now. Rakesh, hi, great to have you on ET Now as always. Rakesh, is the buzz around China and the growth, concerns there now with China cutting the key policy rates as well? Is that the real concern for metals this morning or afternoon?
Yeah, so that has been the concern for quite some time now, and now it's coming out that the misery that housing sector in China is facing is much deeper than what initially people thought. So it will take much more than just the rate cut, which Chinese bank has done to revive this sector. And even if they are able to, it is not going to be anymore the growth engine that we have seen in the last 15, 20 years. Almost 25% of commodities demand used to come from Chinese housing sector, and that engine is now starting to struggle. So from a commodities demand point of view, I think this is going to be a little bit of a headwind, and that is what is really reflected in the metal stocks today.
But given the fact India is a large commodity importer as well, doesn't that come as a good news as well in terms of India being a commodity user? Sure, of course, for metal stocks that's bad news, but overall, what do you think the impact could be?
Yeah, definitely, any kind of a disinflationary environment coming out of China would help not just India, but the rest of the world also, which is fighting inflation. So I think overall for the market, it's good news if commodity prices stay low, and companies will be able to benefit from higher margins. But as you rightly said, metal sector, it's bad news.
The investors right now when it comes to the metal stocks, is there any pocket, whether it's steel or, copper, aluminum, any other facing sector that still looks good for an investment, or it's time now to book out, and whether it's your losses and profits, just take it home?
So, while China is 50% of most of the commodities, so the demand impact is going to be across all commodities. But having said that, we have a slight bias for non-ferrous space. The reason is, aluminum, copper, they have very low inventories in the system. And whereas spending on renewable side of the economy is still going to happen. So probably non-ferrous is the way to go ahead, preferred over, steel, etc.
But Rakesh, purely from an investor's point of view, would you say the advice is to stay away from metal stocks? And do you see a prolonged bout of weakness in the names?
So, see, if you see valuations also are not that supportive. Already stocks have run up, and in fact, they didn't really correct that much when things were going bad. So valuations are not supportive for investment into metal stocks right now. And number two, we don't know, how long these headwinds are going to last. I mean, obviously, we are past that bull cycle for last 15, 20 years, which was driven by China. We are now into that in a declining phase. And the second best economy is India. And India is only like 5% of global demand, 10% of what China is. So India, whatever rate it grows at, can't really replace China. So best days for commodities are, I think, behind us for quite some time now.
Okay, so the peak is already behind us. The valuations are not very supportive. So take your pick. Maybe non-ferrous is a better space versus ferrous. Thank you so much, Rakesh, for making time and speaking with us. Appreciate your view as always. But